just gonna whisper softly and you just try to relax. But I gotta be honest, this video is gonna be a little boring and it might put you to sleep because it's so boring. Basically, the two things I'm gonna whisper about is what Trump stated that he wanted Freddie Mac and Fannie Mae. They're like two entities that deal with mortgages, mortgage-backed securities, and stuff like that. He wants them to buy $200 billion worth of mortgage-backed securities. So when that happens, the yield on the 10-year bond goes down, and in turn, so does housing rates. They go down. And the second thing I'm gonna talk about is the life cycle of a mortgage-backed security. Basically, where it all starts is it starts with a person wanting to buy a home. So they go through the process, they find a realtor, and they find a lender or a bank or a mortgage brokerage company, and they give you the rates and all the paperwork you need to close on the house that you want. So after that happens, that's called origination. And then the brokerage, they take a little fee for that, like a 3% fee on the total value of the home. And then what they do next is they like pool all the loans they closed in a list and they sell it off to Fannie Mae or Freddie Mac. And I think they offered them for bulk of the loans, not just one or two, but like a lot of them. And I think they offer them anywhere from, depending on how good the person's credit is, the spread in between what your rate is and what the market rate is, and a bunch of other things. But Fannie Mae and Freddie Mac, they can pay you anywhere from maybe 1% up to 4% for the total amount of dollars worth in loans. So let's say, as a brokerage, you close on 50 houses, and each house is like 500 grand. So that would be $25 million. That's the total amount of the loan. So let's say if Fannie Mae and Freddie Mac give you 2%, you would get $500,000. That's how much the brokerage lender, the bank who originated the loan, that's how much he would sell off the loans. And then after Freddie Mac and Fannie Mae, they collect all the loans, they pool them together, and they package them, and they create investors want a yield, so they buy the mortgage-backed security. They are investors like 401ks, pension funds, life insurance companies, people like that. So that's basically how it goes from a person to a mortgage-backed security. That's the life cycle. I hope you learned something today. Hope it was helpful. Made you more aware of things. And I'll see you guys on the next one. Peace.